So you can see this is a 1 is almost like 10 risk to reward ratio, which means that you are risking $1 to make $10. A lot of you guys have been asking for the part 2 of the sniper entry video. So here it is, sniper entry chapter 2. So just to recap, why do we want to get sniper entries? Because we want to make money. And we want to get those trades where it gives us like a low risk but high reward trades, right? Like those ridiculous 1:15 risk to reward ratio trades. You know what I'm saying? Right now, I'm just gonna show you this entire sniper entry strategy on some random pair that I will probably never trade, just to show you that this strategy works on any currency pair. So I'm just gonna use NZD, GBP, NZD, British pound, New Zealand dollars. Alright, let's go, man. Yo, this is a disgusting pair, man. I really pity people who trade these. No offense if you trade these though. So before you do anything, you always want to set up your charts for success, right? So what you want to do is to buck your support, the resistance, your supply and demand. Basically use all the tools in your arsenal to help you like mark up the charts. So I can just mark up like a little demand area right here, and we can also see like a little supply zone right here, right? Whenever price gets up here, it always like ended up reversing and heading back down. Okay, and then there's one more supply zone right here. So now that you have marked up like your support, resistance, supply and demand, whatever, the next thing you must do is that you want to trade from one key level to the next key level. It's really just as simple as that, guys. Your goal is to trade from one level to the next level, and then from this level to the next level. So right now on this chart, I can see there's literally so many opportunities where you have entered for a sniper entry. Let's look at this example right here. You can see that right now price is at like this very strong supply area or resistance area, right? So obviously, if price wanted to break past it, it would not like freaking consolidate around here. No, it would just like break past it with a lot of momentum. But that is not what price is showing us. Price is literally just showing us that, okay, they're just small candlesticks right around this area here, and it's just like consolidating, going sideways here. Since there's like a giant consolidation right here, we can just draw like a little box around here, right? Around here. So this entire area is your consolidation area, and this shows us that price is not breaking past this resistance area. Chances are, if price is consolidating around a key level, it is not breaking past it unless it's waiting for some like news announcement for it to just pierce past through. Since we kind of know that like price is not going to break past this resistance area, that means that we should be looking to sell, right? So we should be looking to sell. At this point of time, this is when price has finally broke out of the box. So you could have entered right here for a sell position when price broke out of the box. But if you are talking about sniper entry, super sniper entry, we cannot be entering right here because this is kind of too late, man. You want to be entering somewhere around here, right? So if we zoom in right here, we can see that price actually formed like a double top right around this area here. So the moment price showed us that it went up once, go up again, failed to break past this level twice, we could have entered for a sell position, right? Along with other confluence, because remember, we can't just enter based on one chart pattern, right? We need other confluence. So the first sign is that this is the double top pattern. The second sign will be this is a very strong resistance area or supply zone, whatever you like to call it. And then the third confluence could be this morning star candlestick pattern. I mean evening star. Oh my god, I always get confused between these two. But this evening star candlestick pattern right here, you can see this one green candlestick followed by a doji followed by a red candlestick. So for those of you who do not know what is evening star, this is a oops, not this one, maybe like, yep, this is the evening star candlestick pattern. You can see right here. When price form evening star, this means that price is about to go down, right? It's basically like a candlestick pattern that show you that price is gonna reverse and head back down. Yup, so we have seen that right here when price did this evening star. So now with that, we have our three confluence we can enter for our sell position right here. Or a fourth confluence could even be the moving average crossover. You can see like at this point of time, the blue line is still above the red line, but right here, this is when the red line starts to cross over the blue line, just right here. You can see right here. So this is the moving average crossover, and we can enter for sell position right there. Enter for sell here. I'll place my stop loss above this resistance area right here. Place my take profit all the way down, guys, all the way down at the next key level, which is all the way down here. I can see like there's a very strong support area down here. You can see the reason why I place my take profit right here is because remember, price moved from one level to the next level. So there is a very strong support level right here. So chances are price is gonna come down to this level next. So you can see price price came all the way down here. So this was like a ridiculous 1:4 risk to reward ratio trade. And with that said, there is so many things that you have done during this trade, right? Whenever price starts to like retrace and create structure, you need to move your stop loss. So you can see price went down, come back up to retrace to create your new lower high. So at this point of time, when price created this lower high right here, I would have moved my stop loss all the way like down here above this last lower high right here. Trading view kind of don't allow me to do it, but basically I'll move my stop loss from right here, which is the original stop loss, move it all the way down here, right? Because this is the new lower high. This is structure. Price will respect structure, because if price actually break past this level, chances are it's gonna like continue heading back up. So guess what? You actually got stopped out. And in that case where you actually did got stopped out, but you have moved your stop loss right here, guess what? You are actually still in profit. So technically, if you lose the trade, you are still in profit. That is the crazy thing about this strategy. Yeah, so you always want to make sure you move your stop loss into structure. So you can see price went back down once again, come back up, retrace to create your new lower high. So my stop loss right here, move it again to right here. So now, even if you lose this trade and your stop loss get like smashed right here, right, you would still be in profit, baby. You will still be in a lot of profit, right? So that is why we move our stop loss so that we can protect ourselves and our capital. So when price retraces, another thing you can do other than moving your stop loss is that you can scale in, right? You can scale in and add another position. So when price actually like go down and retrace to create your new lower high right here, this is when you can enter for another sell position. You could have entered for another sell position right here. So now you got not just one sell position, but two sell position in place, going down to your overall take profit. So now you can make like double the amount of profits. So make sure that you can consider scaling in when price creates your structure. Okay, here's another example. You can see that price has just been like going down, but it's approaching our very strong demand area, right? Our very strong support level, which means that there is a very low chance that price is actually gonna break past it. And you can see when price actually approaches this level, the candlesticks are getting smaller and smaller. You can see just smaller, small candlestick, which tell us that there is not much selling pressure. There is not much momentum that's gonna push the price down and break past this level. Nope. The buyers are going to come in and take over the market. So at this point of time, when you see these multiple small candlesticks, you want to wait for some sort of big green candlestick which show you that there is buying pressure, and now price is going to reverse and go to the freaking moon. Yup, so you can see like price actually like go up, retrace to create your new higher low. So at this point of time, when price starts retracing and creating a new higher low, this is the first sign that tell you that price is going to reverse from a downtrend to a uptrend. Alright, that is the first sign that tell us that, right? But we still want to wait for like more confirmation. So what I will do at this point is that I'll just draw like a little Fibonacci right here. You can just draw a little Fibonacci right here. And if you do not know how to use Fibonacci, do yourself a favor and go watch my videos on Fibonacci retracement. I've already done 2 videos and you are really doing yourself a disservice if you do not know how to use Fibonacci. So you can see, okay, price retrace all the way down to like the 50 extension level. Yeah, you can see right here, this is the 50 extension level. So you retrace back to here twice, create your double bottom. 1, 2, double bottom, and it just starts reversing, right? So at this point of time, this is when you have entered for a buy position somewhere around here. When you see that price is not breaking past this 50 extension level, place it your buy order right there, place your stop loss below this last higher low right here, and I'll place my take profit at the -27 extension right here, or even a 61.8 level. But since this video is on sniper entries and not on Fibonacci, I'm gonna be placing my take profit all the way up at the next key level, which is all the way up here, right? All the way up here, because this is like the very strong resistance area. And as you can see, price went up and smashed our take profit. So you can see this is a 1 almost like 10 risk to reward ratio, which means that you are risking $1 to make $10. And if you guys know me, you will know that I will only take the trade if the risk to reward ratio is 1:3. Yup, so this is a ridiculous sniper entry. And remember, as price creates structure, make sure you do two things: move your stop loss and also consider scaling into the trade. So right here, as price goes up and create your new higher low, right here, this is when you could have moved your stop loss from here, which is your original stop loss right here, right? Move it to the new higher low, guys. Move it right here, and as price goes up, create your new higher low, keep on moving it, right? Keep on moving it so that eventually when you get stopped out, you are still in a whole lot of profits. And I will have also like scaled in for another buy position somewhere around here and also around like here. So total I'll have like 3 trades running to my overall take profit, and I will have made like bank on this big beautiful uptrend. Now let's look at like a currency pair that is like more common and more boring for us ordinary humans, and let's look at AUD USD, one of my favorite currency pairs. So you can see I have my beautiful key levels marked up here. We got your supply zones, your demand zones, support, resistance, whatever you like to call it, and we also have your beautiful trend line. So at this point of time, you can see that price approaching this beautiful strong support level that we have drawn right here. What a handsome support level, and price is not breaking past it. So that's the first sign that tells us that price is going to reverse and hit back up. The second sign is that price broke through the trend line right here. This area, this is when price break through the trend line. The third sign that shows us that price is going to go up is your moving average crossover, boys. You can see at this point of time the red line above the blue line, but right here, this is when the blue line cross over the red line. So at this point of time, this is when the moving average crossover occurs, and right now this shows us that price is in the uptrend. So now we got your multiple confluences, multiple signs to tell you that you should enter for a buy. At this point of time, what you can do is that you can enter for a buy position when price break through the trend line, right? But that is still kind of like pussy way to trade, you know what I'm saying? Like, you want to get sniper entries, you cannot be entering when price break through the freaking trend line. You want to be entering when price is not breaking through the trend line. Before price break through the trend line, you want to enter. So I will have entered somewhere around here when the moving average has crossed over. And right now, because we are on the 4-hour time frame and the moving average crossed over right here, but I'm pretty sure if you go down to like the 1 hour or the 15-minute time frame, the moving average has already crossed over somewhere around here. So I'll just enter right around here, place my stop loss below this supply, this freaking support level right here, place my take profit all the way up at this like resistance area right here that we have drawn, this very strong red area here. What a beautiful red head. So you can see this is the 1:4 risk to reward ratio trade, and you can see price went up and smashed our take profits. Okay, now let's take a look at GBP JPY. So another point I want to add is that if you actually get stopped out like this, right? Let's say that your stop loss is right here, and then you got stopped out when you enter for this buy position. What I need you to do is to be flexible. So what I mean by being flexible is that you always want to make sure that you do not impose your thoughts onto the market. Remember, the market can do anything it wants. It can literally do anything it wants. It can go up if it wants, it can go down if it wants. Your job is not to predict the market. No, your job is to adapt, right? Your job is to adapt and react to the market. React to the market, boys. So what I mean by that is that I can literally tell my friend that, hey bro, Euro USD is going up. But then I see Euro USD on my chart going down, even though I thought it was going up. Guess what? I'm gonna be flexible and enter for a sell position. I won't be stupid enough to enter for a buy just because I told my friend that Euro USD is going up. That is what I mean by you gotta be flexible in order to make money in this market. One of the main reasons on why I win a lot of trades is because I'm flexible. I can admit the fact that I'm wrong about that trade. Like, I can switch from a buy to a sell very quickly depending on what the market is showing me. If you found this video helpful and you want to see a part 3, make sure you smash the like button and comment down below and let me know. And bro, make sure you hit on that subscribe button. Welcome to the tribe, and remember, you're just one trade away.